So welcome to Train the Trainer, Plan Year 2017. We're going to go over some changes today for the NCFlex benefits and some other things. I'll get to that in just a minute. Just some administrative reminders. We are, again, my name is Kara Rouse, and I work here at the Office of State Human Resources in the NCFlex program. I've been here for about 5 months now, and the other team members that we have here at NCFlex are Hadley Griffin and Bob Kelly, and then Ray Sherry is our current supervisor. We have this webinar scheduled for about 2 hours today, and then we allowed a little bit of time for questions. Depending on how things go and how many questions we have will depend on how long it takes. It could be shorter, and hopefully if it goes longer, it doesn't go too much longer. We'll try to keep it brief for you. Again, if you have questions, please either type them in, or if you're on the phone, raise your hand and I will unmute you. Enrollment resources, we're going to go over that today as well. The 2017 program changes, the status changes that will be in our HBR manual, and any questions that you have. So for other administrative reminders, let's talk about enrollment guides for just a minute. So you all may have received a link to the enrollment guide because it hasn't been printed yet. It was just sent to the printers this week, so we're supposed to get an ETA on the mailing later today, hopefully, so that we know when those are going to get mailed out. And I'll let you know that the guide that we had online before yesterday, it has now been updated as of yesterday. So please check out the guide that is online now, and that is on ncflex.org. There were a few tiny little things, and I'll try to point them out as we go through in case you already did print a guide. Then you can note them in your guide that you have printed out. Online enrollment, just a reminder, you guys have been in the benefit focus system for a while, so you know that our online enrollment, or our annual enrollment, is online through benefit focus. We will have a mailing this year to all of our members, and I want to preview that for you. This is the first time that NCFlex has done a mailing, and it's actually to all eligible participants for NCFlex. We'll be mailing that out around the end of September or the beginning of October. We're trying to hit right there at the beginning of annual enrollment. And that's kind of to reach out to not only the employees in another way, but it's to reach out to their spouses in case they have a spouse at home that doesn't know about the NCFlex plans, and we just want to educate people on what's available. So let me see here if I can go and share this document with you real quick. And we're also going to be sending out an email soon, either today or tomorrow, to our HBRs that has this mailer in it. Let's see if this comes up. All right, guys, I think the mailer is not working when I'm trying to share it, so I'm going to figure out maybe another way to share that in a little bit so that I can show you what it looks like. And again, we'll email that out to you so you can see what it looks like. We're going to go over the exception process just a little bit at the end of the presentation. Just a reminder that our exceptions are done through our website on ncflex.org. There's an exception document that you complete and submit to us. We also have an email address. That's a common email address for us, ncflex@nc.gov, that I have listed there. We use that to send out emails, mass emails to employees. So sometimes we'll see it come from that general email address. Myself, Bob, and Hadley can all view that email address. please don't send exceptions to that email address. We still use the exception form. That email address is kind of just a general inbox. Let's say that you need more guides after we've ordered the initial guides and you can't get one of us on the phone or don't know who to call, you can email that email address. Again, it's just for general information. Just a reminder of our annual enrollment resources and resources that we have in NCFlex. We have the enrollment guide, and that is our main resource because it's got all our information on our plans and all the updates on them. We've got our website, and I want to preview that for you, as well as short videos on our website of all of the products that we have. If you guys haven't seen the videos, then I'm going to show you a couple of them just so you can see what it looks like. And hopefully this will work. We tried this out earlier. I think that this is taking a minute to come up, so I'm going to give it just a minute to pop up. Okay, so I think you guys can hopefully see my screen now on the internet. So this is our NCFlex website. Our website's going to get updated in the next week or two just to be a little more user-friendly. And it's also going to have our updated information on our dental because we do have a new dental vendor through MetLife. And any other updated documents that we have for 2017, we're going to slowly start putting those on there and hopefully have them all on there by annual enrollment. So like I mentioned on our website, we have different links here for each of the benefits. We also have our HBR exception form. That's where you submit exceptions at. At the very bottom of this page, you have your annual enrollment guide. And if I click there, it will take me to the current 2017 guide as well as the 2016 guide, so you can look at last year versus this year. We have an Enroll Now button that takes you directly to e-enroll so that someone can go from our website to the e-enroll's website to do their enrollment. I know you guys, and I think from there they can choose if they work for the university or where they are at. And then for each plan, like I mentioned, we have, I'm just going to preview some of these videos. So like here's the vision page, and if I click watch this video now, it's going to take us to the YouTube site. And you may have to turn up the volume on your computer to hear that. I think some of you are mentioning you can't hear the sound on the video. I'm not sure if it's just the volume on the computer that you're listening on. Okay. You said you can hear me, so it's not the sound on the computer. I gotcha. Well, you know what? I can turn my sound up, and you can hear it through my phone.
without a physical exam, but with the same terms and conditions if you're under age 70. Or you may convert your term life insurance to a whole life policy without a physical exam and regardless of age. If you elect group term life coverage for just yourself, premiums are deducted from your pay on a pre-tax basis. So you'll save 25 to 40% in taxes, depending on your tax bracket. If you choose employee plus dependent coverage, premiums will be deducted on a post-tax basis. Annual enrollment occurs in October each year. New hires must enroll within 30 days of their employment, and once you're enrolled, there's no need to re-enroll each year. To learn more about NCFlex benefits, enroll and access your certificate of coverage, visit ncflex.org.
Okay, hopefully you guys could hear it a little bit. Just for me, I tried to lean up to the speaker so you could hear it on the computer. I'm sorry about that. I'm going to go back here. So I'll just mention that there is a video on each of our products, and if someone clicks on the individual video, it will take them out to the video, and if they just let it sit there like I did, it'll kind of go to every video and play each of them on the YouTube channel. So they can watch them all simultaneously, or they can just pick and choose which one they want to watch from our website. And a lot of them, or all of them, mention the same things as far as when they can enroll, how long they have to enroll, the pre-tax savings that they have, and then the other information is catered to whatever the benefit is. You guys may have also seen, I'll just mention this briefly, Alex, which is a tool that we have that helps employees decide on benefits that they want. And we're not sure that Alex is going to continue to be around, so we're not going to go into that too much today. That's still under negotiation right now. So I'm going to go back to the PowerPoint slide. Hopefully you guys can see this now. Got it? Okay. This is just a reminder of what the effective dates of coverage are. You guys probably already know this, but just go over it again. We have annual enrollment each year in October, typically October 1st through the 31st, but that can sometimes change, just like last year when we had a little bit of a setback and it was a different time frame. I think it was October 15th through November 18th, but typically they try to hold it in October of every year. The benefit elections become effective January 1st of the following year, so this time it'll be effective January 1st, 2017. New hires have 30 days from their date of enrollment to enroll in benefits. I'm sorry, new hires have 30 days from their date of hire. I said enrollment. And sometimes new hires get entered into a system, into the payroll system, not at exactly that 30 days, but they still only have 30 days from their date of hire to enroll. The benefits are effective the first of the following month from the date of hire. Same thing with life events. They have 30 days from the date of the life event to make a change, and it's effective the first of the following month from the date of the event. This is just a brief mention of what's new for 2017, and again, we'll go over all of this in detail in the other slides, but this is a good overview of it. For NCFlex, we have a new dental carrier, which is MetLife. We're going to show you that we have some new rates. Carl will mention that. The high option rates have went down. The low option rates have stayed the same. Then we have the high option benefit is enhanced a little bit. There's a new $5,000 maximum on the high option. The coverage levels have changed a bit as far as going from one child to two children or more to just children, and Carl will go over that again. We have a new AD&D vendor, which is Voya. They are our vendor as well for group term life. They have been our vendor for group term life, but now they're also our vendor for AD&D. The increments have changed as far as how much someone can enroll in. There's new rates for that. Critical illness, there's a new $25,000 option on top of what we already had, which was the $15,000 option. For the cancer plan, there's no EOI again for 2017. We had that for 2016, but they're doing again for 2017. And then for the group term life, there are new guaranteed issue amounts and lower rates on that. So we'll go over that today. And Someone just asked if we will be sending out the PowerPoint presentation, and yes, I can email that to everybody so that you can have these slides. And again, this is also being recorded, so once we are done with this, we can make this available, this presentation available to everybody. So let's go ahead and start on the plan overview. I'm going to quickly go over the plans because some of you, probably most of you already know what our plans are about, but just in case you're new and you don't, I'm going to quickly go over them but then highlight our changes. So let's start with the flexible spending accounts. And if you do have a guide in front of you, I'll tell you the page numbers in case you're following along in the guide. So the flexible spending accounts are on page 7 of the guide. And it tells you here, and I'll go over exactly what a flexible spending account is, but just like the other plans that we have that are pre-tax, it's a way to increase your benefits, increase your take-home pay because you're getting money taken out pre-tax from your paycheck, so you're saving on taxes, lowering your tax bracket, and then you save 25 to 42% on taxes, just like I mentioned. And reimbursements of this account are made by direct deposit, and I'll mention that again in just a minute. I want to go to this slide first because I want to briefly explain what the flexible spending account is. So during annual enrollment, this and the dependent daycare spending account are the two plans that employees have to re-enroll in every year. The other plans are automatically rolled over if the employee does not make a change. So that's one important thing that we always try to remind our employees of, is that they need to re-enroll in their flexible spending account and their dependent daycare spending account. It's an account that during annual enrollment or as a new hire or during a qualifying life event, someone can put money aside, elect money aside to have taken out of their check. When we're in annual enrollment, the amount that someone can choose, the max is $25.50. And that amount gets divided up by 12 throughout the next year. So the first deduction will come out at the end of January, and the rest will come out throughout the year. So whatever deduction they choose or whatever the amount they choose, it's divided up by 12 and taken out each month. That money is taken out of their check pre-tax and then can be used for a qualifying medical, vision, dental expenses. And so they're saving tax money on it, basically. They're not paying anybody to do anything. They're using their own money. They're just saving taxes. The max amount someone can put in there is $2,550, same thing it was this year. They can use that money for themselves, their spouse, their children, or a qualifying relative. And I think all of the qualifying dependents are mentioned on page 5 of our guide. And those dependents don't have to be on their medical plan. Like I'm married, my husband isn't on my medical plan, but I can still use the flexible spending account for him, for his prescriptions, his co-pays. Just a reminder that the full election is available immediately on January 1st, so if they choose the full $25.50 in October, then January 1st they're going to have that full amount in their account to use. And if they're a new hire, they can choose that same amount. I'll mention that when I said if they elected it during annual enrollment, it's going to be divided up by 12. Well, if they're a new hire, it becomes effective the first of the following month, so say they're hired in June, and it becomes effective in July. That amount is going to be divided up by how many months are left in the year. So it's going to be larger amounts coming out of their checks, and new hires just need to be aware of that. Same thing if they have a qualifying life event, like say someone puts $600 in their account for 2017 and then in June they have a baby. They can choose to put more money into their account and choose a higher election. And then the remainder of it will be divided up by however many months are in the year. I've done that before when I had my son a few years ago. And it can be a large amount, but then if you're paying for a big expense, it can help out. And that money is available the first of the following month if they have a qualifying life event or they're a new hire. Eligible and ineligible expenses examples are on in our enrollment guide and on our website, and I think they're on page 8 of the enrollment guide. If someone has a prescription if they're trying to get an over-the-counter medication, we have a list on our website of things that might qualify. They just need a prescription or a letter of medical necessity to use for those over-the-counter medications that are eligible. And I'll run back to this slide real quick. So this just tells you when someone can use the benefit and how long they can submit claims for. So if they choose that money during October of during annual enrollment, they can use that money from January 1st, 2017 to March 15th of 2018. So there's that 2.5-month extension that someone gets. If they submit, for submitting claims, they have a little bit more time past March 15th. They can submit claims through April 30th of 2018, but the expenses have to have been incurred through March 15th of 2018. And then new employees, of course, who join in mid-year, that money can only be used from the time it starts. So again, if they're hired in June, their effective date becomes July 1st, and that's when they can start using their money. They can't go back retro to before they started and use that money. And I'll take this opportunity to mention that if someone separates, I know it mentions on page 8 of the guide, termination of employment. If someone separates, they only have through their date of hire or through their date of separation to use that money. However, it's recently been agreed with P&A that if an employee wants to use that money through the end of the month that they separate, an HBR can request from P&A. Our current representative is Jen Nolan, can request for her to extend that period through the end of the month, but that's only through an HBR requesting it, so it's not automatic. So now, just to mention the convenience card, which is on page 10 of your guide. That card is issued for the flexible spending account. They're automatically issued to anyone who signs up for it. They're good for 3 years, so if you get an employee who's not receiving a new card in 2017, that's probably because they haven't had it for a full 3 years yet. P&A will automatically reorder it for them, so if it does expire, the employee does not have to reorder it. They're supposed to automatically get a card. They just need to make sure their address is updated in their payroll system. The card is used like a credit card. So if they go to the pharmacy or go to the doctor, they just swipe it like a credit card. There's no PIN required. There's no additional charge if they want to order a new card or get a card for their dependent. Just like I said, I have a husband who uses the account, so I can get a card for him if I want to. We just kind of pass it around. And when we go to Walgreens, like to pick up a prescription, they have it on automatic pay. So I just tell them to use the quick pay, and they already have my card on account. It can only be used for eligible health care expenses, and of course someone needs to report a lost or stolen card immediately to P&A. And I wanted to mention that for employees who are participating in the Consumer-Directed Health Plan through the state health plan, and that's the 8515, that's another name for it. I'm echoing now. I don't know if someone took me off mute, maybe. Yeah, there we go. Sorry, guys. If they're participating in the Consumer-Directed Health Plan, that's the account that has an HRA, so Healthcare Reimbursement Account, and it gives someone, if they're an individual, it gives them up to $600, gives them $600 up front to use for medical expenses. When they participate in that plan, they're going to get a card in the mail, and sometimes employees get confused between that card and this card. They just need to know that that card, if they're using it for prescriptions, because that's what I believe they use it for, they go and swipe it at the pharmacy, the money on that card needs to be used before our flexible spending account is used for health care expenses. And someone just asked a question, why can't the extension be automatic as far as extending it to the end of the month? I'm assuming employees won't know to ask for this. And if they do, yeah, we're increasing the workload. So we tried to get them to automatically extend that through the end of the month, and it came down to technicality with files going from Benefit Focus to P&A. They're apparently, when Benefit Focus has a term date on their file that they send to P&A, that term date is automatically that employee's separation date, and it can't be altered. P&A cannot accept a different term date than that employee's separation date. So when and I guess a better way of saying that is Benefit Focus has to use one term date, and they're sending that term date to all vendors. And so to change it only for P&A, I think that was discussed, and for some reason they can't do that, or P&A can't accept it. So it has to do with the files that are loading, and that's why they're not automatically going to catch it. But so maybe in the future we'll be able to have that automated, but for now we're stuck at it's going to be the separation date, and if the employee does request it from you, then you request it from P&A. We'll go to the next slide. So now we're going to get into Dependent Daycare Flexible Spending Account, which is like the Healthcare Flexible Spending Account, but a little bit different. So it's the same sort of thing where money is set aside in an employee's paycheck and divided up by the number of months left in the year. So if they do it during annual enrollment, it's going to be divided up by 12 throughout the year. The max amount per household that someone can put in is $5,000 for the Dependent Daycare Spending Account. And this is used for daycare expenses up to age prior to a child turning 13. And there's other eligible expenses, and they are on page 12 of our guide. So again, it's a $5,000 max. The difference in this account and the healthcare spending account is that money is not all available January 1st. It's not available until it's actually taken out of the employee's check. So the first time it's taken out of the check for annual enrollment is the end of January. Once it's taken out, it's put into an account that the employee can request a reimbursement from. The other difference is they don't get a card for it, so they have to submit the claim online on P&A's website. And you can get to P&A's website directly from the NCFlex website. Both you and your spouse must work to participate, and again, the eligible and ineligible expenses can be found on our website. I'll say that I've used this account myself, and after getting through it initially and uploading the claim, it's become pretty easy. Once someone gets a bill for their daycare, they can actually upload the claim prior to getting that money dumped into an account. And so like in January when I submit a claim, prior to getting the payroll taken out, as soon as it gets taken out of my payroll, they've already got my claim, and within 1 day, typically, sometimes 2 days, I get that money right back into my checking account. So I had that lump sum taken out of my check pre-tax, but then I get the full amount dumped back into my checking account. On page 13 of your guide, it gives examples if an employee wants to know what's better for them, this account or the dependent care credit. They can look on page 13 and maybe try to help decide that. I've already mentioned some of these. Reimbursement is limited to your available account balance. Special rules apply for separated divorce employees. Always check with their tax professional if they have questions about it. They don't have a convenience card for this account. There's a website they can upload their claims, and that is on our website as well. And then they can see details in our guide and on our website. So now we're going to talk about dental, and I'm going to go ahead and let Carl take over, I think, if he's on the phone. And I will go through the slides for him. Carl, are you there? Oh, I'm sorry, Carl. Can you try that again, Carl? Hey, guys, give me just a minute, and we should be able to get him on here.
Hey everyone, this is Carl Ripperger. Can you hear me? Good morning, everyone. I'm not sure if everyone can hear me. Kara or Bob, if someone can confirm, maybe send me a note that I'm on. Oh, terrific. Sorry, everybody, about the technicality there. This is Carl Ripperger. I am with MetLife, and I want to first start out by saying we really appreciate this opportunity to be your dental vendor for 2017. We're very excited about it. We know that any change can create some angst for folks, so we are working very diligently with the NCFlex team to make sure that this is a smooth transition for everyone. As your account manager, I will be your point person for the MetLife plan for any issues that you have. My information will be provided to you later as we get a little closer, but I am going to make sure that you continue to get terrific service on your dental program. So with that, we'll get into the dental plan, and certainly if you have questions, send a note to Kara, she'll feed that to us. The plans, there are still two plans that you have the choice of, a high plan and a low plan. You have complete freedom to go to either. One thing I'll mention up front, this is a passive enrollment, so if you're already in a plan and don't want to make any change, you don't have to do anything. You will automatically be fed over through the Benefit Focus file feed to MetLife on January 1. That will happen automatically. Another thing I'll mention up front is we will be providing a welcome letter and ID cards to all participants that should arrive at the end of December. That will go out automatically to all participants. The plan I want to mention on the previous slide is one that allows the complete freedom of choice to go to any dentist, whether in or out of the network. There is no penalty to go out of network. The plan's going to pay the same percentages, deductibles, and allowable maximums, regardless if you go in or out of network. The difference is if you go in network, you have the ability to save some money because those dentists have agreed to discounts below their usual charge in the community average. To find a dentist, you simply go to metlife.com/dental, put in your zip code, and enter the plan name PDP Plus, and you'll see all the dentists in the area, in your area, depending on the radius you select. Okay, next slide, please. This slide and the next slide are a high-level comparison of the two plans, the high and the low plan. Before we get into the details, you'll see that when you look at the percentages, it says a percentage of MAC. That's the maximum allowable charge. You'll see the percentage is the same whether you're in or out of network. The difference is if you go out of network, that percentage is based on the reasonable and customary level, or RNC. You're probably familiar with that. That's the lesser of the dentist's actual charge, usual charge, or the community average. So if you're out of network, that dentist may bill you for the difference between reasonable and customary and their standard fees. If you go in network, it's based on that discounted fee that I mentioned that dentists have agreed as payment in full. So the good news is if you can go in network, you're going to have a lower starting point and you'll have a kind of ability to maximize the value of the plan. Looking at the services, the diagnostic and preventive services for both plans are paid at 100%. Your type 2 basic restorative services, fillings, simple extractions, root canals, paid at 80% in the high plan, 50% in the low. Perio services and oral surgery are at 50% in both the high plan and the low plan. Major restorative services, crowns, bridges, implants, dentures are only covered under the high plan at 50%, and orthodontia also is only covered at in the high plan at 50% for children up to age 19. So let's go to the next slide. The deductibles, the calendar year deductibles, the same as what is currently under the UCCI plan. It's for the high plan, it's a $50 per individual, $150 per family, applying to type 2 and 3 services only, not your preventive services. In the low plan, it's a $25 individual deductible, $75 for family, and that does apply to both type 1 and 2 services. So that's the same as current. As Kara mentioned, there is a higher max for 2017 in the high plan that is increasing from $2,500 to $5,000 per individual, excluding orthodontia. So that's a calendar year max for each of your covered folks in your family. So if you have yourself and 4 other family members covered, that would be each of your 5 total family members has a $5,000 max. The low plan has the same as current, a $1,000 per individual maximum. The orthodontia max, again for the high plan only, is $1,500, and that's going to include any reimbursement received from UCCI for that covered child. So if your child is in braces in 2016 and you use $1,000 of your maximum in 2016, MetLife is going to pick up any remaining treatments after that up to the additional $500, the total of $1,500. Hopefully that makes sense. Again, orthodontia, not covered in the low plan. Okay, next slide. This slide highlights the changes to the plan. As we mentioned earlier, and this is only to the high plan from what is current in 2017. Here's a summary of the changes. The high plan will have an annual maximum increasing from $2,500 to $5,000. You'll see the asterisk there is highlighting that the type 1, 2, and 3 services all apply to the annual maximum. Now, we're pointing that out because currently the UCCI plan type 1 services do not apply to the $2,500 max. That will change for 1/1/17 with the increased maximum. Hopefully that's a good trade-off view by everyone. The other changes are really designed to help keep the cost as low as we can. As Kara mentioned, the price, we'll go over that in a minute, is stable or a little bit lower. Anesthesia and oral surgery, we're moving from 80% on the high plan to 50% under the type 2 services. The frequency for perio surgery, 1 in 24 months to 1 in 36 months. Replacement of fixed bridges and dentures to 1 in 7 years. And replacement of a filling to 1 in 24 months. Especially those last 2 are really bringing this plan up to current standards of care. I'll say that a properly placed and maintained denture or bridge should last more than 10 years. So bringing this replacement feature up to 1 in 7 years should not create any real issues for you and your participants. Same thing with the filling. Okay, let's move to the next slide. This is a good example of the potential savings that someone can achieve by going into going to an in-network dentist. Again, it's a hypothetical example, but it's really very realistic. So it's assuming someone's in the high plan and the dentist says you need a crown, which is a type 3 or type C service. The assumption is the negotiated fee, that discounted fee we talked about, is $670. Reasonable and customary is $1,386. Dentist usual fee, $1,462. So if you go out of network, the dentist is going to be looking for $1,462. Reasonable and customary is $1,386. So this dentist is higher than the 80th percentile. The plan's going to pay 50% of $1,386 or $693. So your out-of-pocket, out-of-network will be $769 for that crown. If you went in-network, the dentist's usual fee is $1,462, but the negotiated fee that the dentist has agreed to is $670 payment in full. So 50% of $670 is $335, leaving your out-of-pocket of $335. So in this example, if you go in-network, you'll save $434. It's important that I point out that I certainly recognize that everyone's dentist, one, is not going to be in the network. We've got a great network. I think you're going to find that. But if your dentist is not in the network, it's tough sometimes to leave a general dentist that you've been loyal to for years. We get that. But I think this example is one that will help show you that if you can, even if you're not going to an in-network dentist for routine care, when you need specialty care, try to get your general dentist to refer you to someone in the network because you can really save some money there. Hopefully that makes sense. Next slide. So you and your employees will have the ability to call our customer service center. So that's certainly one option. But lots of folks like to be able to go online to get information, and this shows you a couple ways of doing that. One, you can go to metlife.com/dental for the features in the boxes below. So during the enrollment, finding the dentist is probably what most folks are going to want to do to see if their dentist is in the network. So if you go to metlife.com/dental, you'll be able to find a dentist. There's also a great oral health library out there. When we get closer to claim time, there's an EOB guide, there's the HIPAA authorization form, and there's a link to My Benefits. And My Benefits is the personalized portal that's secure for employees to go out and see information specific to them. Once you register on My Benefits, you'll be able to view your benefits and claim history. You'll print the EOBs as needed, and you can print an ID card directly from that. One feature that's nice is you could set up an email alert to let you know when your claim has been processed. And since about 85% of our claims are auto-adjudicated, as soon as that dentist sends in that claim, 24 hours later, you're going to have an email telling you that you can go out and view the results. So on the next slide is just a slide about the mobile app, because lots of folks like to be able to go on their iPhone or Android to get information. So we do have a good app that you could pull by going to iTunes, App Store, or Google Play and search MetLife. It's a free app. Once you have it, you can find a dentist. You need to register on My Benefits to get your personalized information, but once you've registered, then you'll be able to view your own personal claims history and print your personal ID card. Not print your ID card, but view your card on your phone. And finally, Kara mentioned the rates. Currently you have 5 tiers, and that's moving to a 4-tier rate structure. So the difference is currently there's an employee plus one and employee one child and employee plus more than one child, and that's being consolidated to employee plus children, so there are 4 tiers now. Other than that change, the low option monthly rates are the same as current, the high option rates are a little bit lower than current. That is all that I have. I think the one other thing that I will touch on is we did mention orthodontia and how that would work, but if you have any questions about someone who may be having some major work done that's going to span over from 2016 to 2017, it's not uncommon to start the process for a crown or a bridge, and it may not be completed until 2017. Well, MetLife is certainly going to receive that, and if the dentist is charging for those expenses in 2017, it will be considered an eligible expense, and MetLife's going to pick up under the plan provisions. I would certainly encourage anyone who is considering any service that may span over 2016 or 17 to share the change with their dentist. The dentist can call MetLife in advance of the effective date of 1/1/17, and the participant can call MetLife on the customer service number that's in the admin guide, the enrollment guide, and speak directly to MetLife's customer service about any questions with transition of care. And there is going to be a transition of care document that ultimately will be posted on the NCFlex website. Are there any questions at this point? If not, then we'll turn it back over to Carol.
Carl, I think the only question I saw was the PDP, if it was the PDP Plus network, and I believe that's correct, but so far I don't see any other questions. I'm going to unmute you just so you can confirm it is the PDP Plus network.
That is correct. I'm sorry I didn't mention that. So when you're searching for a dentist, you'll put in your zip code and pick the PDP Plus network from the drop-down. So when you go out to that site, to MetLife's site, it will be on that landing page, find a dentist, and you simply put in your zip and PDP Plus. Good question. Thank you.
And do you want to, I may have missed it, but did you mention the mailer that will be going out?
I did not. So I mentioned the mailer that will be the welcome letter with the ID card at the end of December, but we are also going to send a reminder mailer that will go to all employees, and that will go out to arrive at around October 15, just to remind folks about the dental plan, hopefully pique their interest, and get them to participate. So that will go to all employees around October 15.
All right, thank you, Carl. I think that's it. I don't see anyone typing in any questions. If we have any others come in, I can forward them to Carl. And I'll mention, too, that I know he talked about the mailer that's going to go out at the end of December for a welcome letter to let employees know that we are changing to MetLife, and also to include that ID card. And he may have mentioned, too, that after that, ID cards will not be mailed out for dental. And so the way employees will access that, and I know he went over the website on the MetLife and how they can look at their benefits, and that's how they'll be able to get their card. I think that's kind of the standard way most dental plans are going now, is trying to get out of the paper cards and printing them online. And I think also a lot of times when an employee goes to the dentist and tells them that they have MetLife, even if they don't have their card, it should be pretty easy for the dentist to file a claim for them. So I think that's it for the dental. We're going to go ahead and move on to the next. One other thing, too, that I'll mention is that in the guide, because I said that if you had already printed a guide before yesterday, There were a few tiny changes that we had to make when we looked at it again. And so one of those, if you did come to one before yesterday, was that we realized on page 16 of the guide, the oral surgery and I believe the anesthesia both should be on 50% of under type 2 instead of 80% for the high option. They should be 50%, and that's been moved on the new version online. But on the old version, the oral surgery is the one that we haven't moved yet. So that's it. So now we're going to go over. Okay. Let's see. It's saying that I'm faint. I don't know if you guys can hear me. We can't hear you. You're too far from the speaker. Okay. Let me try to turn this up. Can you hear me better now? Better? Okay. I think it's, good. Okay, I think it's my headset. There's like a volume on the back of it, and I just learned that I can turn that up and down. So, the little things, you know. So let's go ahead and go over the vision, and that is on page, if you're following in the guide, page 19. So, no changes with the vision plan. There's one small thing that changed in the guide that I'll mention, but we'll just go over the vision plan briefly because a lot of you probably are already familiar with this plan. So there's 3 plans that an employee can choose from. There's the core wellness exam, which is the free plan. Employee does have to enroll in it. It isn't automatically given to them, and it is for an employee only. So right there it mentions there's no dependent coverage on that one. The only thing that's going to pay for is the cost of an exam once per year with a $20 copay. It also will give them, and it'll mention this on the next slide, it'll also give them some discounts on materials, but it's not going to pay out any significant amount of money for materials like the other 2 plans do. Then there's the basic and enhanced, and those are the ones that are going to come with a premium, and they can enroll their family in the plan. They can enroll the children or spouse, other participating, or other qualifying members. And again, those qualifying dependents are listed on page 5 of our guide. So with both the basic and enhanced plan, any participant on that plan that they have enrolled can get 1 exam a year for a $20 copay. And the difference is going to come into how much they're going to pay for the materials. Someone just asked to repeat what I said about the oral surgery. So I had mentioned at the beginning of the presentation that the guide, if you had printed out the guide prior to yesterday, because we did update some few small details in our guide, and then we've put the updated version on our website now. One of those small details that we updated was on page 16 of the guide. We had oral surgery under type 2 paying 80% under the high plan, and it should actually be where the 50% is, under type 2 for the high plan. So that got moved on the new guide. And the materials for the basic and enhanced, when someone gets whatever materials they get in a year, it's either contact lenses or glasses. They can't get both in 1 year. Let's see if I can go to the next slide. This just gives you a brief overview of the difference in how often you can get materials. It's also, it goes over this more in detail on page 21 of the guide. But for both the basic and enhanced, each participant can get either a vision exam or a contact lens fitting per calendar year with that $20 copay. And then they can either get lenses or contact lenses every year, but under the basic, they can only get frames every 2 years. That's one big difference, and the other big difference in the 2 plans is how much they're going to pay. And if you do look at page 21 of the guide, it goes over for the frames are going to pay under the basic up to $125 and 20% off of that, and up to $175 for the enhanced and 20% off after that. And then difference in contact lenses for the basic $120 and for the enhanced $150. One thing I wanted to mention in the guide that has changed a little bit for the vision is on page 19, where it goes over cancellation of coverage in that bubble on the top right-hand side. It used to be more general with the 2-year lockout period, but now it's a little more specific that the lockout period applies if you're on the basic plan and you drop the basic doesn't apply if you're on the enhanced plan and you drop the enhanced plan for a year, or if you're on the basic and move to the core plan, then you can bump back up to basic the next year. So it's a little more specific. Employees may not pay attention to that, but it's there. Just wanted to let you guys know. Someone asked if an employee can use the materials credit on glasses and then get a discount on contact lenses or vice versa. And I believe that they can. Let's see on page 21. Sorry, page 22. I'm not 100% sure on that question, but I can find out for you. And when I send the presentation to Tamika, someone's sending me some information. Thanks, Rob. He sent me some information that says discounts are available on additional purchases of glasses and contact lenses. There you go, Rob. Ranging from 10% up to 30% of retail prices. I bet you got that from the guide, didn't you? Keep in mind the additional materials discount will apply to any subsequent purchases of materials after you make your first insured purchase. Thanks, Rob. I appreciate that. You're helping me out. So then on page, so basically it's saying that yes, after you get your one material, you can still get discounts on the other things. And so this slide just kind of goes over some of the advantages of our vision plan. Like the provider networks and optical chains, there's no waiting period for first-time enrollees, no pre-notification requirement. They're going to get an ID card in the mail, and then they can request additional copies at no charge. There's refractive surgery discount benefit and an internet mail order contact lens provider. So now we're going to go into the critical illness, and that's on page 23 of your guide. I mentioned in the beginning of this presentation when we went over what the changes were going to be for 2017. One of the changes is that our critical illness is now going to have a $25,000 option. Before we only had the $15,000 option, but now they can choose one or the other. On page 23 of the guide, it has the rates for each option depending on the age range. And let's see, I'll go over this slide. So they can get a lump sum benefit of $15,000 or $25,000 for each covered illness at the time of diagnosis. So this pays out for a diagnosis. There's no EOI required for someone to enroll in this plan. And that's for late entrants, newly eligible employees, and dependents. It does not take the place of a health plan, so it's not going to pay for someone to have medical things done. It's just paying out in the event of a diagnosis, and it's paid in a lump sum to the employee, and that lump sum is taxable. There's a maximum of 2 payouts per diagnosis, and there has to be a 12-month waiting period for reoccurrence. So if they had a heart attack one year, then they had a heart attack later on, there has to be a 12-month waiting period, but they can get paid out for both. If they had a third heart attack, they cannot get paid out a third time. It's only up to 2 times. If someone asked if they currently have this coverage, will it continue without making an election during annual enrollment? And yes, it will. Any of the plans other than the flexible spending account and the dependent daycare spending account, all the other plans will automatically roll over, including the dental. Even though we have a new vendor, it's automatically going to roll over. There's a couple of things happening, like with the dental. Carl mentioned that we have the new tiers, where it's dropping, instead of having just one child and then multiple children, it's just dropping to children. So anyone with one child or multiple children on their plan are automatically going to be put into the children plan. And there's a little bit of a difference with the AD&D, which I'll mention. They're still going to stay on it, but our levels have changed, so they're going to automatically be put in a certain level. But yes, it does automatically roll over. So the covered illnesses are listed on page 23 of the guide. And this is another small change that was made if you printed off the guide before yesterday. On page 23, on the left-hand side where it goes over the covered illnesses, we had end-stage renal failure in both columns for 100% and 25%. It should only be under the 100%. not the 25%. So just mark that out if you already have your guide printed. But it is updated in the new guide. So this shows that at 100%, so that's whether they choose the 15,000 or the 25,000. That's for heart attack, stroke, major organ transplant, bone marrow transplant, invasive cancer, paralysis, or end-stage renal failure. And then the 25% benefit has carcinoma and coronary artery bypass surgery. This just gives you an example of what employees can use this money for if they get paid out the lump sum. Expenses not typically covered by medical plans, so drug, medical copays, deductibles, out-of-network treatments, experimental, non-traditional treatments, and then they've got non-medical expenses. So travel, child care, lost income, mortgage, anything they want to use that money for, they can use that money for. It doesn't have to be designated for anything specific. These are the premiums for the $15,000 option and the $25,000 option. $15,000 option premiums have not changed. It says I'm fading out again. Is my button not working? Might be. Can you guys hear me better now? Just let me know if it gets worse, and I'll put it on speaker if I need to. But the prices haven't changed for the $15,000 option, and then you've got the $25,000 prices there. And just remember, if an employee enrolls in this plan, children can be covered at no cost. And the cost for a spouse on this plan is going to be based on the employee's age, not the spouse's age. The other thing I'll mention as far as in the enrollment system, something that's changing with this plan is before it looked like the group term life plan where they chose employee coverage, then spouse coverage, and child coverage. Now it's going to look like the health plan, and that's just the way it's laid out. So it's going to look like employee only, employee plus spouse, employee plus family. So the tiers are going to look different on the system. They're not changing. It just looks different, and it's supposed to be easier so they don't have to enroll 3 separate times for their family members. So now we're going to go on to the cancer plan, and that's on page 25 of your guide. So the big thing with the cancer plan, where it mentions there, for 2017, there's going to be no EOI again this year. They did that last year when they were the new vendor, and that's Allstate, but they're doing it again this year because we have had some problems this year with the cancer plan as far as premiums go, people getting enrolled. And so this is a good faith effort to help people and give them a guaranteed issue again. This just gives you some brief information about the cancer plan. They have coverage for employees only or their dependents with them. They have the option of low, high, or premium, and there's no rate changes for this year. And so basically for anyone, and you guys may already be familiar with the cancer plan, but in case you're new or aren't familiar with the cancer plan, the way that it works, like on page 26, it goes over different things that happen if an employee gets cancer, and what's paid out for those things. So there's under the low, high, and premium, depending on which one they choose, depends on how much gets paid out. If someone isn't diagnosed with cancer, they still are going to get that cancer prevention and screening benefit if they do one of the things for cancer prevention or screening. So like for women, if they get a pap smear or mammogram, and then there's the colonoscopy and that. So different things apply for the wellness benefit, and then they can apply for that cash back or money back. So someone is asking me, will Benefit Focus Portal see the same issues with enrolling or declining in cancer insurance? And I'm going to mention that in just a minute about what's going to change in the enrollment in the Benefit Focus Portal. So for the wellness benefit, I'll say that if someone does have a claim that they haven't submitted, I believe they can go back up to 5 years, and the cancer plan will still pay it. It's a little tricky right now because we did start with Allstate this year, so if someone goes back prior to this year, it may go back into the old vendor. But the cancer wellness benefit claim form is on our website, so if someone wants to know how to submit a claim, they can go on our website and get that form to do that. So someone's asking, is the EOI waived for the critical illness plan too? The critical illness plan does not have an EOI, so there's no EOI on that, and there usually isn't. So this year, again, there's no EOI. So I'll go back to Rob's question regarding the cancer plan and the problems we had with Benefit Focus last year. So to kind of explain what we experienced last year with Benefit Focus and the cancer plan. So when an employee goes into Benefit Focus to enroll in their benefits, all of the benefits except for cancer are done directly there in Benefit Focus. So when an employee makes a change, that record goes into Benefit Focus. The cancer plan was different. And what we call those other plans is a managed benefit, whereas cancer, you can't really tell if you're not paying attention, but it actually goes out to their site to enroll in the cancer plan. So it's not doing it within the Benefit Focus site. And so that's where we came across the problems, is they're going to the cancer site to do it, and then cancer has to transfer that information back to Benefit Focus. So that's more information transferring back and forth, more room for problems. And the reason they did that was because it was easier for them to find when an employee needed an EOI or get that EOI to an employee. So we made a decision that it would be better to use it as a managed benefit, and then we'll deal with the EOI issue. So they're actually switching over to a managed benefit with the cancer plan, but that won't start until annual enrollment. So for anyone left this year that is still using, doing anything with their cancer plan in the system, like a new hire, they could possibly have, we're hoping that it's working better now, but they could still experience some strange things in the system because it is going out to the cancer plan's website. And I'll also say that one of the issues we found is that with the cancer plan, because it was going out to their website, this year in 2016, if an employee had a qualifying life event, they could not make that change in Benefit Focus. And we realized that was around the middle of the year. So we put a note on Benefit Focus's site when an employee is enrolling that they need to call in to the cancer plan, because what we were finding was that employees were requesting for a change to be made, going through their HBR, it was coming to us, we were approving it, then the cancer plan actually has to get them on the phone and they had to reach out to them. So to get rid of all of that, we just said contact cancer directly. So if an employee has a qualifying life event through the end of this year, they need to call cancer to make that change on their side. During annual enrollment and after this year for qualifying life events and new hires, it's going to be a managed benefit, and they should be able to do it directly through Benefit Focus. I hope that helps answer your question, and hopefully it will go better. If you're having a problem with a new hire in the system, then let us know what the problem is, and we'll try to get with cancer, because we talk with cancer weekly, sometimes bi-weekly, about issues we're having and try to get those solved. And someone just asked again if they understand that the EOI will be done online or still sent. So right now, as far as annual enrollment goes, there's not going to be an EOI required. As far as new hires go, no EOI required. And if an employee already has the cancer plan and adds a dependent due to a qualifying life event, no EOI required. The only time I believe an EOI is required for cancer is when an employee has a qualifying life event, they've never had the plan, and then they enroll in the plan initially. And as far as how the EOI is sent, I'm not 100% sure. I think it's still being sent out. I don't think we've got it into the system yet. Yeah. Bob's confirming with me. It's still sent out. It's not online yet. So hopefully once we move to the managed benefit under the cancer, then we can tackle that EOI issue, because that would be really nice to have it automatically online. So now we'll get into the group term life and AD&D. So the group term life insurance is going to be on page 28 of your guide. And so this slide mentions that our group term life has been administered by Voya, but now our voluntary AD&D and our core AD&D is also administered by Voya. That is also going to be administered by them starting January 1st, 2017. Right now, we're still under AC Newman and Company. And to mention something on that, as far as our participants who were on AC Newman and Company and retired or left the state, they did have the option to port or convert their coverage. And the difference between port and convert is if they ported, they stayed under, like the state of North Carolina umbrella, and they actually stayed under our rates. If they converted, they went under the AC Newman umbrella, and they went under maybe a higher rate. But when we stop our contract with AC Newman, if they had converted, they could stay under AC Newman. If they had ported, they stayed under our umbrella. Therefore, those employees who only ported their coverage and stayed under our umbrella, their coverage is going to end 12/31. And just a reminder, that's only for separated employees. So we've had some phone calls from retirees and past employees who are kind of upset about that. And we just tell them that the option they have is to go, if they're a retiree, they can go to Pierce's website at ncretiree.com. And Pierce has an accident policy. It's not the same as an AD&D. It has an AD&D part to it, but accident is more encompassing, I guess. It covers more things, so it may be a little bit more expensive, but it does have that AD&D part of it. So if they are a retiree, if you get a call from them, and if you want any wording from us as far as what to tell someone who calls you, let us know. But I think we're mostly getting the calls because they did receive letters on that in the mail. So this is the group term life coverage options and amounts. So under our group term life, we do have the spouse independent coverage available. So you can do employee only, employee plus spouse, employee plus children. I think it's, you can choose it for any of your dependents. And then with the employee spouse, they have the option of choosing from $20,000 up to $500,000 in increments of $10,000. And I'll go over the guaranteed issue in just a minute. For children, they have the option of $5,000 or $10,000. Sorry, guys, I need a drink of water. Okay, so the big thing that's changed with our group term life this year is the guaranteed issue amounts, and these are huge. So we're going from new hires, when they're hired, the guaranteed issue amount is $200,000. They can automatically enroll in with no EOI. And that's only the employee. The spouse still remains at $50,000 guaranteed issue. It used to be $100,000, now it's $200,000 for the employee only. So during annual enrollment, the child remains at $10,000 still. But during annual enrollment, the thing that has changed, so an employee can go up to $200,000 in increments of $20,000. So before, the way it was is that an employee could go up $10,000 every year without EOI up to $100,000. Now they can go up in increments of $20,000 up to $200,000. So this year, if an employee has $90,000 in life insurance, they can go up another $20,000 and get $110,000 and not have an EOI required. Late entrance, so if an employee was a new hire and didn't initially enroll and they want to enroll for the first time this year, the EOI or the amount that doesn't require an EOI still remains at $20,000. That is the highest amount they can get if they've never had it before. But if they do have it, again, they can go up in increments of $20,000 up to $200,000. The spouse coverage still remains the same, $50,000 they can go up to. Let's see. The child coverage can be added at annual enrollment without having to provide an EOI, and that remains the same. This just mentions that, because all of our plans are pre-tax, but with the life insurance, we get into imputed income. So this just mentions that if an employee is signed up for employee-only life insurance, it is pre-tax. If they choose to cover their spouse and or children, then it becomes post-tax. If they switch back to employee-only, it becomes pre-tax again on their paycheck. The rates have went down on the group term life. Those rates are listed on page 28 of your guide, and they have went down a little bit. You won't notice a huge change until you get up to the higher amounts and the higher ages, then you'll see a larger change. and they are based on the age of the employee. So if an employee gets spouse coverage, their spouse's coverage is based on the employee's age, not the spouse's age, and it's based on their age as of January 1st of the current plan year. So if the employee is currently going to be 55 on January 1st, then it's going to be based on that age. Other plan benefits included with our group term life, we've had this one for a little bit, the accelerated death benefit with continuous confinement benefit option. So if an employee is given less than 6 months to live, then they can get paid out 50% of their life insurance policy, as well as if they are, and this is on page 29 of your guide on the right-hand side in the upper part, if they are diagnosed with a condition that requires continuous confinement, then they can get up to 50% of that benefit paid out. There's also a new funeral planning and concierge service. This is going to be new for 2017. It's through Everest. That's the company's name, Everest. So that's funny. Well, it mentions it on page 29 on the bottom left-hand side. We'll have more information on our website for that and how employees can access that, those services. But me and Bob played around with it a couple months ago. They had an option where you could go in and test it out, and it was pretty cool because, I mean, it's not cool when you have to use it, but it was a good tool because you could go on there and search your area, and it gives you a comparison of the funeral homes in your area and has them listed by maybe who's the less expensive and who's the most expensive and what types of services they offer. So it's a good service for people who need to use it and makes planning things a lot easier. There's a disability waiver of premiums. So if an employee goes on disability, and a lot of our plans have that, so an employee should check to see if they go on disability, if they have the option to waive their premiums for that plan. Continuation option and conversion option that they have when they leave. So now we're going to get into the core AD&D and the AD&D. The core AD&D remains the same. It's still free for employees only. They have to enroll in this, but they only have to enroll in it one time. It does roll over every year, but they have to initially enroll in it. So if you have an employee who's a new hire or hasn't enrolled in it yet, just encourage them to do that because NCFlex helps fund that money for employees to have. It's a $10,000 accidental death and dismemberment policy. Like I said, it's paid for by the state of North Carolina for employee only. It is available to all employees who are eligible for NCFlex. They do not have to enroll in the voluntary AD&D or any other NCFlex plans to be eligible. They can just enroll in this plan if they want to, but they must elect it during annual enrollment or as a new hire. And again, it rolls over every year. And they can have the same beneficiaries for the core and the voluntary AD&D if they want to. Under the voluntary AD&D, not much has changed other than the increment amount, and I'll mention that in just a minute. But this is just showing you, for those who may not have seen the voluntary AD&D, again, this is just examples of what it pays out for. So an employee can choose, whereas the core AD&D, because it's free, it is employee only. But the voluntary AD&D is for an employee or them and their family. And so, for instance, for life, if an employee loses their life due to a covered accident, it would pay out 100% of the benefit they chose. I'll note that on page 32 in the top right-hand side, if their spouse is covered and their children are covered, it's only going to pay a percentage of that benefit. And then they have all of the examples listed on page 32, but these are just some of the examples. Like if they lose certain limbs, if they lose a hand or foot, or hand and one foot, speech and hearing in both ears. And some of the wording has changed as far as quadriplegia, paraplegia. So some of these wordings you'll notice are a little bit different, and Voya asked us to do that. Voya Travel Assist, so you know that we've had before, when we had AC Newman, we had the Travel Assistance Program, and the new vendor is Voya, but we still have the Travel Assistance Program. We will have some flyers posted on our website with more information about the travel assistance that employees can print off, and there's also one with like a card on the bottom of it that they can cut out and take with them if they want to. and it's got that phone number on there that they can call, and I believe their website. And so the VOIA travel assistance is for traveling more than 100 miles from home. It's for them, they can use a toll-free number or their website to get access to information, and I'll have another slide with what types of information they can get. And the services are provided by Europe Assistance. So some of the things they use this for is pre-trip information, emergency personal services, medical assistance services, or emergency transportation services. And I believe it talks about the travel assistance on page 31 of your guide. And again, we'll have flyers on our website. And that is, if an employee takes the voluntary AD&D with them, it does not come with the travel assistance. They only continue, like if they separate, they only continue the voluntary AD&D, not the travel assistance. The travel assistance comes with them as an employee under the AD&D coverage. So the change that's coming with the voluntary AD&D is that we've taken out the $25,000 amount. So before we had, like for instance, between 50 and 100, there was a $75,000 option. That option has been cut out. So it's only increments of 50 now. Any employee who is in that option, like the $75,000 option, is automatically going to be bumped up to the next option up, and they will receive letters in the mail. So if you guys get questions about that, you'll know why. That's just to make them aware. And the premiums, which are listed here, are on page 32 of your guide. TRICARE supplement plan. This is the last one that we have in our guide, and that's on page 34. Nothing has changed with this. The rates are still the same. It's paid for by the employee through a payroll deduction. The premiums are on page 34, and I think we might even have them on the next slide. The eligible employees, just make sure that if an employee enrolls, they know that they are eligible. And it lists on page 34 all of the who are eligible, and it briefly says here, retired uniformed service members enrolled in either TRICARE Standard, Extra, Prime, or TRS, and who are not eligible for Medicare. 34 has all the details. And someone asked me, will employees with increment changes reflect at the new level in benefit focus? Yes, they should reflect in the, I believe it'll have this year's plan year and 2017 plan year, and under the 2017 it should show the new increment amount. So if they go in there to do their enrollment, they should see their new levels under 2017 plan year. These are the TRICARE premiums. Again, nothing's changing this year. So now we're going to move on. We've covered all of the plans that are in our guide, and the next few things I want to talk about is just status changes and some of our common exceptions that we get here in our office. So these status changes, I don't know if you guys have our current HBR manual, but we have a new one that will be coming out soon, hopefully within the next month. And I took these status changes directly off of our manual. Not a lot has changed with this, so I won't take too much time to go over in detail unless there's a big change with it. But, you know, there's marriage. That's one reason that an employee can make a change to their benefits. They have 30 days from that date of marriage to make a change. If they have a death of a dependent, these list benefits and the different things that they can do with their benefits. And most of them are pretty obvious things. If you find that there's something not listed here that you feel like an employee should be able to do and they're not able to do it in the system, that's when you send an exception request to us, and we review it and see if it makes sense. We tried to cover everything that we thought was a possibility, but again, if you think that we're missing something, please send us a message and request it from us. Divorce, legal separation, not much has changed here on as far as what they can do. Birth, adoption, legal custody, or guardianship of a child. And again, not much has changed here on what an employee can do in the system. They still have 30 days from the date of that event to make a change in the benefit focus system. Now, the loss of other coverage has changed just a little bit. Not as far as if they lose other coverage under a spouse plan, but we changed internally what we allow as far as someone going from one employer to another employer, and if they have a state-sponsored post-tax plan. And for instance, this applies to with our employees from DPS, DOT, and HHS, I believe, are the three main agencies that have a post-tax plan. If they are on their agency's post-tax plan and they go to another agency or they go to a university, before we have allowed them to pick up the NCFlex dental plan, but we're no longer allowing that. If they want to continue coverage, they would do that under COBRA, under their employer-sponsored plan, and then at annual enrollment, they can enroll in our NCFlex plan. And we did that because there's issues dealing with ours is a pre-tax plan and theirs is a post-tax plan, and it gets a little complicated in that way. So that's the only change as far as that goes. Otherwise, other losses of coverage, the same things still apply. Now eligible for other coverage and gain of other coverage, this still remains the same as before. Return from leave of absence, they can re-enroll in their benefits. It still stays the same. I'll mention on one of the next slides that returning from leave of absence is one of our big problems that we have. I think employees re-enrolling in benefits, and that's one of the biggest exceptions that we get. And then the court order, nothing much has changed with that either. That's just another exception or another status change that they have. And as far as the dependent daycare spending account, these status changes are just a little bit different. It has a little bit more flexibility with it. And so we have our own little section here for that. We have if the dependent child becomes ineligible at age 13, then they can drop or decrease because they might still have a child on it that's under age 13, but they may need to decrease the amount that they have because their child aged out. Dependent child begins kindergarten or first grade, so say that the employee had been putting money in it, and then in August that child starts kindergarten and the employee realizes they don't need that much money in it, then they can drop or decrease the election. The daycare provider changes rates. The daycare provider significantly changes coverage. The participants change daycare providers or they terminate daycare services altogether. So these are all reasons that they can make changes to their dependent daycare spending account. But they still only have 30 days from the date of that event to make a change in benefit focus's system. So we just wanted to mention some of the common exceptions that we get because we had employees or HBRs ask us this as far as the exceptions that we get here at NCFlex. And you probably know this, but just a reminder because I think some people aren't aware that we are separate from the state health plan. So when you're sending in an exception, they have an exception process, and then we have an exception process. So sometimes you're sending in an exception for all of an employee's plans, but you have to send it to 2 different places. And we may take a different amount of time. They may take a week, and we take 3 days. They may take 2 days, and we take a week. So you're not always going to get it back at the same time. But during annual enrollment, some of the biggest problems we saw last year were employees who were enrolled in their employer-sponsored dental, such as employees with DPS. They were enrolled in their MetLife dental, and then they enrolled in NCFlex dental on top of that, not realizing that they were 2 different dental plans. Part of that, I think, was that they couldn't see their prior elections. So when they called into Benefit Focus, and Benefit Focus said, do you want to re-enroll in your dental? And they said yes. They're not knowing that it's NCFlex dental and not their MetLife, so that was a big one last year. Employees who accidentally drop dependents because maybe they're selecting some new coverage and they accidentally choose employee only instead. Employees accidentally drop their coverage. Employees thought they enrolled in something and didn't hit save. That's probably our biggest one. Outside of annual enrollment, just missing that 30-day window is huge. That's after a life event. That's after when they're first hired, or they forgot to re-enroll with that leave of absence when they're returning. And I'll mention that last year with our annual enrollment, we received exception requests. We received exception requests. We were probably still getting some in August of this year for last year's annual enrollment. The year before that, we had NCFlex had cut off the time we would take exceptions. I think it was March 3rd or so, and this year we never cut it off. But starting in 2017, we're going to be having another cutoff. I don't know if universities have as big of an issue because you guys have been in benefit focus for a while, so your employees were familiar with it, whereas our agencies, they weren't as familiar with it, and so we probably have more exceptions coming from them. So you guys may not have that big of an issue with it. And I think that is the last slide that I have. Does anybody have questions that they want to ask? And you can type them in, or you can unmute your phone, or I think if you raise your hand, I can unmute it for you. Again, we'll have this, we recorded this webinar today, so we're going to have it available once I figure out how to access what we recorded. We're going to have it available and send it out, probably send it to Tamika with the universities and let her distribute it, as well as the slides. I'll send that to her as well for her to distribute. If you have a question directly for me, I'll give you my email address if you want to email me. But typically you guys go directly through Tamika or Ashley Nicholas, I believe. But my email address is Kara, K-A-R-A, .f, like Frank, .rouse, R-O-U-S-E, @nc.gov. Someone is asking me, do you get a member ID card if you sign up for Core Vision? Yes, you do. Because I'm enrolled in Core Vision this year and I have a card. So, got my name on it. PowerPoint emails or on-site. We're going to email the PowerPoint. I don't believe we'll have it on our website, so I'm going to email it to Tamika and let her distribute it. I think she has all of your contact information. And then once we get the recording, I think it takes a little bit for it to process, but once we get the recording, we'll also send that out to you guys, or send it to Tamika so she can send it out, especially for anyone who wasn't able to attend. Will the ortho benefit carry over? So I think Carl went over that a little bit, but I'll go over it again. So with the ortho benefit, it is going to carry over. That means that if an employee was already using ortho and they have that $1,500 maximum, I believe it's the $1,500 maximum, so they've already used part of that, then they're only going to be able to use the remainder of that with MetLife. So it's going to be continuous. And MetLife will continue to pay for the ortho, but they're only going to pay for expenses incurred after January 1st, starting January 1st. And again, if they've used any of that $1,500, because that $1,500 is a lifetime maximum, not a yearly maximum. I hope that makes sense. And you will have, someone answered, you'll have some out-of-pocket. For cleaning, for example, if you go to out-of-network. That's true. You could possibly, I go to an out-of-network provider for just my cleanings because that's the only thing I get done, and I think I pay an extra $3 maybe. It's usually not a big difference, and that's one thing Carl was talking about is that he understands that we have a lot of out-of-network providers that people may be participating in, and that's not where the big expense comes in or the big difference in the expense. It's when they have that extra work done. I think that they can see a huge difference in what the dentist is charging. But when it just comes to cleaning, typically the dentist isn't charging a lot more. Again, I go to an out-of-network provider, and I think I might pay an extra $3 or something. It's usually not a ton more. If they spend $750 in 2016, will the $750 carry over? Rob, I think you're asking that for the ortho, right? Okay, and then you said okay. So I think I answered your question. So, yeah, okay. So if they spent the $750 for the ortho this year, then they still have a $750 to spend. That's correct. Yep. And as far as the out-of-pocket for the cleaning, because the dentist has, the dentists who are in-network have an agreed-upon price, and that's all that the dental carrier is going to pay. So when you go to an out-of-network provider, they're not going to have an agreed-upon price, but typically they're not charging a ton more if they're charging more at all. And I know that Carl said, and he didn't say this part, but one of the reasons that MetLife was chosen was because they do have a larger network. So we hope that some people who maybe aren't in network now will be in network. And if not, then like Carl has said at other presentations, now that the state is one of their participants, hopefully that will be leverage for dentists to want to come on board with MetLife and be a network provider. Someone just said, did you say employees who had ported to AD&D were being dropped by Voya as well as retirees? That's true. It's not they're being dropped by Voya, they're being dropped by AC Newman and Company, because AC Newman was who had our contract before. So if an employee separated or they retired, same thing, then and they ported that coverage, then yes, they are going to be dropped effective 12/31/2016 this year, because they won't go on Voya with us. Voya is only for active members. And Carl wanted me to mention that no waiting periods with the dental. So that might be one reason y'all asked about if the ortho would carry over. So in our guide on page 17, it does. We kept that page because we wanted to point out that there are no waiting periods for anything. So if an employee has never had dental coverage before and they get the high option dental, then there are going to be no waiting periods for ortho or anything. If they went from low to high this year, no waiting periods. So there's no waiting periods for anything. So if they're going, like I just said, if they're going on to high for the first time, they can start ortho treatment right away. So. Any other questions, guys? Give you a couple more minutes. All right, guys, I think we are done with questions for now, so I'm going to go ahead and end the call. Thank you so much for participating today. This was my first webinar, so I appreciate you guys hanging in there with me. It was fun. And I hope you guys have a great day.